Are you interested in decoding the financial statements of IREN Limited? If yes, you have come to the right place. Today, we will translate their fiscal year Q1 2026 statements into simple words, and we will compare it with previous numbers to get a clear picture on the company's growth. Fresh Q1 fiscal 2026 earnings, which ended September 30th, 2025, recorded a $240.3 million revenue, a massive 355% increase year over year. Net income exploded to $384.6 million with EBITDA at $670 million. Bitcoin mining drove $234 million of the revenue, but AI prepays are slowly bridging the gap. Looking at year-over-year revenue trends, in fiscal year 2023, they reported $75 million. In 2024, grew to $184 million for a 145% increase, and for 2025, they are at $501 million, marking a 172% rise, meaning their revenue has 6x in the past 2 years. The good thing about this revenue is that majority of it comes from Bitcoin mining, which means their infrastructure spending is paying off. Key metrics include diluted earnings per share, which is a conservative way of calculating a company's profitability per share, came in at $1.08, which beat estimates of 15 cents, along with cash holdings of approximately $1 billion. To give you a clear picture of their progress, let's look at some quarter-over-quarter comparison tables. I'll pop this on screen for you to follow along. Pause if you need to digest the numbers. On the balance sheet, total assets have been continuously growing to approximately $4.3 billion in Q1 2026, thanks to operational expansions. Total liabilities are almost $1.4 billion in the same time period, which has grown 24% quarter-over-quarter compared to a 45% growth in total assets. The huge difference between total assets and total liabilities means that they can pay their debt 3 times over if it comes to that. Their current assets are at $1.1 billion, more than 5x their current liabilities at $204 million. Showing solid liquidity. Shareholders' equity stands as $2.9 billion, which tells us what's left for the shareholders after all their debt has been paid off. Their current ratio in Q1 2026 is fantastic, signaling strong short-term health, and their low debt-to-equity ratio means they are financing their growth more with equity than debt, which is always a good sign. In the income statements, mining drove the bulk of the revenue up significantly year over year. Gross margins improved from operational efficiencies. Operating expenses rose with infrastructure expansions, but net income 4x quarter over quarter. Volatility from Bitcoin prices is a factor which can be seen through the volatile numbers on their income statement. Looking at the cash flow statements, operating cash flow, which is the amount of cash a company generates from its core business operations, came in at $142 million in Q1 2026, which is more than half of what they did in the whole fiscal year of 2025, explaining their massive growth. Free cash flow is a negative $284 million, which in simple terms calculated by subtracting capex from operating cash flow, explaining their spending on acquiring and improving their long-term assets. Before we conclude this video, please like and subscribe if this video is adding value. Now, time for the final verdict. They have a solid balance sheet with manageable debt. They're expanding their business in the right way, which is by using way more equity than debt. The recent 5-year contract with Microsoft worth $9.7 billion is only going to fortify their financial statements in the future. I'm highly optimistic about IREN's future and the growing AI HPC business they have diversified into, though their market cap seems inflated right now. All in all, I give their financial performance a thumbs up. If these numbers have you rethinking your portfolio, drop a comment with your biggest takeaway. Do you think IREN is overvalued right now? Thanks for watching. I'll see you in the next video. Until then, take care and invest wisely.